Now, our main focus point on InvestTalk today was about 10 different ETF strategies that you can deploy. Now, the first would be simply buy and hold, right? Much better than owning typically mutual funds, typically are higher fees. You can get access to a lot of the same strategies in the ETF world. So that's number one. Then dollar cost averaging, right? The commissions are now zero across most major brokers. And so buying consistently over time into a set asset allocation can be a good way to get good prices and avoid the emotions, the up and downs of the market. And that brings me to number three, which is creating broad asset allocation. It's not just about buying the S&P or the Qs. It's about utilizing all the ETFs that are out there, all the different portfolio strategies that are out there to develop a strategy that makes sense for you, your broader goals, the broader view on the markets and the economic trends that we're seeing, et cetera. And that flows into sector rotation, right? It's something we do at KPP Financial, which was we look at the broader economy, the growth and inflation, and typically what regime we're in and how that relates to particular sectors or asset classes that might under or outperform. And so sector rotation, especially with those sector ETFs, 11 sector ETFs that are out there, that you can really drive a more targeted allocation based on a macro view. Then we have swing trading. You can use them for short-term trading, and then supercharge that with leverage. Now remember, leverage should be only used very sparingly, and the leverage ETFs, whether it's long or short, should only be held for short periods of time. You're talking about week, 2 weeks, 3 weeks max, okay? And then there's hedging against things like inflation, so buying tips or commodity ETFs, etc. It's a good way to hedge. Now, dividend investing, it's also a good way to use ETFs is finding good dividend ETFs, but not just the ones that are paying the highest dividends or that say high dividend ETF, not the way that you want to go. You want to go with ETFs or dividend ETFs that own businesses with good balance sheets, that have dividends that are sustainable, that aren't just high for the sake of being high. They are there and driven by good cash flows and profitability. And then lastly, thematic investing. This is where most people get in trouble, is they get invested in sexy new ETFs that are trying to capture exposure to particular themes. And typically when that happens is they're buying in at very high prices, and then the bloom comes off the rose and there's another theme that gets hot and everyone's pulling money from those old themes that are that were expensive and suddenly become a lot less expensive because the price goes down. So thematic ETFs are probably where most people get in trouble.